what is depreciation? Depreciation is the name of the expense that we recognize when we write off the cost of an asset over some period of time. Now, typically, if an asset is meant to last more than 1 year, we don't get to expense it all at once, and we have to write it off slowly over its useful life. Now, the reduction on the books of the value is sometimes correlated to the reduction of what's happening in real life to its fair market value. Let's think about a delivery truck. We get to expense that over the course of 5 years. Now, obviously a 5-year-old truck is worth less than a brand new truck, but it's probably not worth zero. So depreciation doesn't always completely correlate with what's happening to fair market value. Think about a building, for instance. A building that's 10 years old might be worth more than it was when it was purchased originally. Yet we still get to depreciate and write off a building over time. Now, the tax rules about how fast we can write off assets change all the time. There are special rules that let us write off everything in the first year in some cases, which can be a really helpful tax strategy because you get bigger expense, which means you have lower income and pay lower tax. It can also be a practical expedient. A $10 stapler might work perfectly well for 10 years, but we certainly don't want to have to be making journal entries to expense $1 of the stapler every year for 10 years. So depreciation is an important bookkeeping and tax strategy. You just need to make sure that we're using the appropriate rules for your situation, your type of business, and the kind of asset that you purchase.